Hi everyone, and thank you for joining us at the Get Resilient Summit. Today what we're going to focus on is real estate and the home buying process. My name is Joanna Zupas and I'm a real estate agent at Keller Williams in Winter Park, and I'm accompanied by Eric Putt at Waterstone Mortgage. And we're not only going to talk about the home buying process, but we're going to drill into VA home loans and everything that you're going to need to know about VA home loans and some frequently asked questions. And we're hoping that by the end of this, you'll not only understand the home buying process and the VA loan process, but you are better equipped to go out there and find the home of your dreams and feel comfortable about how to go about doing that. So we're just gonna jump right in, and Eric is going to start us off by talking about VA loans and some questions that I have outlined for him. The first question that I have for you, Eric, is can I get a loan from the VA to buy a house?
So the Department of Veterans Affairs does not specifically provide the lending. It's the lender themselves who are loaning the money. And what the VA does is simply backs those loans. It insures it. So as long as the lender themselves are an organization that provides VA mortgage loans and they meet guidelines, then the VA is just backing that loan and insuring the loan. But it's not them, the VA themselves, giving the money.
Okay. Now, how does a veteran go about applying for a VA guaranteed loan?
Simply by contacting a mortgage lender, whether that be a local professional, a representative of a bank, a mortgage broker, a direct lender like myself, online. The key is that, is it a lender who provides VA loans? If they do, it's simply by applying, and that can be done online, over the phone, face-to-face visit, but it's just simply applying with the VA lender themselves.
Okay, now is there a minimum service threshold that a veteran needs to have in order to be eligible for a VA loan?
Yes, and I'll tell you, many lenders don't even know what they are, because as a lender, we just look to make sure that the veteran has a certificate of eligibility. But the minimum service thresholds that are provided by the VA say that if the veteran served 6 months or more, technically 181 days or more during a time of peace, or more than 90 days or more during a time of war, they are eligible for VA financing. If they were in the reserves or National Guard for 6 years, they can be eligible for financing. Or if they are the spouse of a deceased veteran, they could also be eligible for VA financing.
Okay, great. Now, I know that there's a certificate of eligibility that a veteran needs to apply for. How does one get one, and or can the lender get it for him or her?
Yeah, it is our job as a lender to get that certificate of eligibility. And most of us as lenders, we can get it in a matter of seconds. Our operations departments will have access to the VA portal and simply clicking a few buttons and it comes right back. There are some times when it won't come back immediately, where we may need the veteran to give us a copy of their DD2 form 214, which is just some extra paperwork that we need to get, and even then their certificate of eligibility will come back very quickly. But it's the lender's job to pull it, and most of the time, like I said, it's back in a matter of seconds.
Okay, now why should a veteran choose a VA loan over the other types of loans that they could choose from?
Sure. Quite frankly, I think it's the best loan program out there. As a lender, the most important feature of the VA loan program is that it does not require a down payment. So the veteran, obviously, from that aspect, can save a ton of money. Even if they have money saved for down payment, what if it's not enough to cover the closing costs or prepaid expenses? What if it's not enough to cover a lot of the move-in expenses? What if they can just simply do better with their money elsewhere? So it's a really nice feature for not only the person or borrower or veteran that may just simply be very limited on funds, even those that are not limited on funds. The idea of not putting any money down when you truly crunch those numbers is a really appealing aspect of the VA loan. So that's the most popular thing about it. I'd say the second most important feature is that there is no monthly mortgage insurance required. Many loan programs require a borrower to pay monthly mortgage insurance, which is a percentage of their loan amount, and they just make it in their payment. The VA loan does not have it. It just simply does not have a mortgage insurance payment at all.
That's amazing. Now, what is the max that a veteran can apply for?
Well, the maximum VA loan amount is $484,350. So that's $484,350. There are some areas in the United States that are called high cost areas. So many parts of California, the northeastern part of the United States, so there's one or two spots I think in Florida where home prices are just simply a lot more. And so they will raise those maximum VA loan limits. But for the most part, the overwhelming majority, the VA loan limit is $484,350. However, that does not mean a veteran cannot buy a $600,000 or $700,000 home and still get their VA mortgage loan. The VA loan can still be very, very good for higher end price points. It just means that they may not have that 100% financing or no money down option. But to put no money down, you can purchase a home as high as $400,000 and essentially $485,000 and not put any money down.
Okay, that's great. Now, I'd like to dive into some of the misconceptions that people have about VA loans. And so what are some of the misconceptions that you see out there that you feel like that just is not true?
There's a lot. I think if you just, in no particular order, if you look at them at qualifications, there's a lot of people out there that think that VA loans are much harder to qualify for. Well, oftentimes it's the contrary. The VA loan program has a lower credit score requirement, a higher debt ratio allowance than, let's say, a conventional mortgage loan. There are other things that go into qualifying parameters, but I think there's just this general misconception that it's harder to qualify, and that's just not the case. There's a misconception about VA appraisals, that for just simply the simple fact that it is a VA appraisal that's being done, it's going to come in low, or it's going to have all these different conditions on it. And that's also not true. There's another popular one that VA loans take longer to close. I mean, that's absolutely not true at all. In fact, if you take me and my team and our company, for example, our average turn times are about 25 days or less. That's VA, FHA, conventional, it doesn't matter. Those are the main ones. I'd say the top three misconceptions that are out there.
Okay, and now I know that a lot of people have this misconception about WDO, wood rot. Can you elaborate on that as well?
Yeah, so a WDO is a wood destroying organism report. It is required for a VA loan. It is the one loan program where the lender themselves are required to obtain a part of the inspection reports that take place. We have to get a WDO report. It has to be a clean WDO report. So if the VA appraiser notices some evidence of wood rot, maybe notices some visible termites, even though they're not an inspector, but just by their eyeball test they can see some things that may lead toward wood destroying organisms either being active in that house or shown at some point. If there's evidence of just some wood rot that's laying around, that VA appraiser may in fact then mark the appraisal report to be subject to the repairs of those said areas. So we need the WDO report. It's a requirement, but oftentimes the appraisal may also state that these repairs are going to need to be made. So either way, there's protection, I think, there from the veteran. The appraiser saying that the report won't be valid until the repairs are made, and that the WDO report, if it shows that there has been evidence or either an active infestation, it has to be fixed as a result, or in a way, in an effort to get the VA mortgage loan. The veteran cannot get it unless that WDO report's clean, or if in this case the appraisal report comes back and confirms that the repairs were made.
Okay, yeah, that definitely makes sense. So now let's move away from the appraisal part and let's talk about credit scores. Now, can a veteran's credit score affect their VA loan rate?
It absolutely can, but another misconception out there on VA loans is the credit score requirements. Technically, the VA does not have a minimum credit score requirement. However, every lender who's offering VA mortgage loans, you can bet is going to have their own rule on that. And so it really just depends on what lender you're talking to. Whoever that lender is, though, generally speaking, yes, the lower the credit score, the higher chance it's going to have on negatively impacting the interest rate. But on a VA loan, for example, if you have a credit score, let's say in the 620 range, that impact on the interest rate won't be near as significant as somebody who is getting a conventional loan in the same credit range.
Okay.
So, I mean, at a 30,000 foot level, you could say yes, a lower credit score could definitely impact a VA mortgage loan. But you really got to look at what are the lenders. For example, us at Waterstone Mortgage, we'll go as low as a 600 credit score on a VA loan, where I know of a lot of my local competition is 620 or 640.
Right. Okay, now, if someone wants to buy a condo, can they use a VA loan, or does it have to be used on a single family house?
It can be used on a single family home, a townhome, or a condo. There are a lot of real estate agent professionals especially who think that a condominium cannot be financed with a VA loan because it doesn't appear on a VA's condo approval list. In our local market of Central Florida, especially Orlando, there are very, very, very few condos that are even VA approved. But just because they're not VA approved, it does not mean that one cannot get a VA loan. If it's not an already approved project by the VA, it just simply means us as a lender, we have to do some more due diligence. We have to get some questions answered, review some financials, review the master insurance for the project to make sure it meets VA guidelines so VA can then warrant the project. But yes, you can absolutely still get a VA loan. It is another misconception out there that it must be on a VA condo approval list. That's not true. It just means we have to do more work.
Right, and I just want to also put out there that this is the buyer would need to pay for that approval process.
Yes.
And they could go through the approval process and it not be approved, and
Correct.
that is money that they would forfeit, because it
Correct.
wasn't approved.
The reality of a condo is that there could be some things that we as a lender end up finding out that could deem that particular condo not eligible for VA financing. And if the customer had to pay for that information, which most of the time they do, they simply could be out of that money.
Okay.
When we order a condo questionnaire or get budget docs, review of the master insurance, these condominium projects or management companies, they use a third-party service that provides that information. And that third-party services, they have a charge. So very rarely do you find a management company or a condo project that provides that information for free. So it does need to be paid
Okay.
by the borrower either upfront or maybe even at closing.
Okay. So this is one of my hot questions. I feel like a lot of people ask this question. If a veteran has already purchased a home with their VA loan, can they get another home with their VA loan?
You can absolutely get another VA loan. There's no limit on the number of times a veteran can use their VA benefit to purchase a home. There's just a couple caveats here. If you have had a VA loan before and you're wanting to utilize that VA benefit to get a new VA loan on a new purchase, then your other VA loan must have been paid off. In other words, you've sold your other house, most likely, and now you are going to buy a new home with the VA loan. Now, the VA does allow a one-time exception for the veteran who has paid off his or her mortgage loan but still owns that house. So the loan's paid off, you still own the home, you want to continue owning that home, but then go buy a new house. The VA loan program will allow you to do that, where they won't require that former home to be sold, and you could still go get a VA loan.
Okay, that's great. Now, what fees should veterans understand that they still have to pay, and they should still calculate in their equation?
A veteran is going to have the normal standard closing costs that any other borrower would. The VA loan will not come with any increased closing costs or decreased closing costs. It is all standard. So no matter the loan type, you just got to look at, well, what's the purchase price and what's the loan amount, and that's going to dictate approximately how much those closing costs and prepaids are, which obviously that's going to vary. The bigger takeaway is that the veteran, him or herself, is still going to have the customary closing costs and prepaid expenses. Now, the seller, as always, can contribute toward the closing costs and prepaids, and they're allowed to contribute a maximum of 4% of the price toward the veteran's closing costs and prepaids.
Okay. Now, can you explain how the VA funding fee works and how that impacts the loan?
Yeah, so the VA funding fee is the whole reason the VA loan program exists. VA collects a percentage of each loan amount, goes into a big pool, and that's how they're able to continue backing and insuring more mortgage loans. If they did not get that fee, the VA loan program couldn't exist. So it's a percentage of the loan. It could either be financed into the loan, which is the most common way. It just gets rolled right into the loan itself, or the veteran can pay for it at closing. But most of the time, like I said, the funding fee is just financed into the loan, and it is a percentage of the loan amount.
Okay, great. The next thing that I want to talk about is a VA appraisal. What is a VA appraisal, and how is that going to affect the veteran?
Well, anytime somebody gets a mortgage loan, the lender, we're going to require an appraisal be done. The appraisal tells us the opinion of value of that subject property. Is the contract price supported? Do the comparable home sales in the area also support that price? We obviously need to know that because of the amount of money that's being lent on that property. So all loan programs, are going to require an appraisal. Mm-hmm. But a VA appraisal is a little bit different because as a lender, when we have a VA loan and we're ordering the appraisal, we just simply click a button, and instead of the order going directly to the appraiser, us managing that process, or if it's a management company, the lender's hands are pretty much freed up after we click a button because it goes to the VA office. And the VA themselves are the ones that coordinate the appraisal order. It's the only loan program that's like that. So VA appraisers must be approved directly to do VA appraisals themselves. So there's not a ton of them. There's not as many VA approved appraisers as there are, general. Okay. And the VA appraisal, I would just say, can take a little bit longer because of that fact that the VA is very much involved in it. So instead of the standard week, we always tell our clients you may want to wait, allow up to about 10 days for the VA appraisal.
Okay, great. Now, can we talk about the fact that the termite inspection and how that needs to be it's a mandatory part of the appraisal?
Well, it's the appraiser is supposed to give an opinion of it. Did he or she see anything that they think may not make the home meet property guidelines? Mm-hmm. Property guidelines have to do with safety and livability, right? And I know that that's a broad term, but it's an opinion. The appraiser is providing an opinion. Is there anything in that home that is going to impact safety and livability? So when you get into wood destroying organisms, those are things that could impact livability more so, and potentially even safety. The appraiser is not an inspector. They are simply there to provide an opinion if there's anything that they've seen that may need some further investigation. Okay. So like I was saying before, if there's just noticeable wood rot, if there are in the case of like window sills, you can see some wings that are there from dry wood termites that are just dead termite wings that are laying there. The appraiser is going to make a comment on, hey, we may want to further research this. And if that appraisal comes back and there's comments that are being made, now it is on the lender to ensure that all of those things have been addressed. So the VA is going to look into that and make sure that all of those things have been done prior to the closing of the loan.
Okay. Now, can you take out a VA loan for a second home or a vacation home?
The VA loan program specifically says that it is required for the veteran to be purchasing a primary residence. So the answer to that question is no. It must be for a primary residence transaction. Now, the spouse can be included in that. If the veteran is married, his or her spouse can occupy, as long as they're occupying as the primary residence, then it's allowed, but it cannot be used for a second home or an investment property. Something that's maybe not be known as well is multifamilies. So like a duplex, a triplex, a quad, a veteran can purchase one of those with the intent of having an income producing property, with the intent of renting out other units, as long as the veteran is going to occupy one of those units, him or herself, as their primary residence, then even a multifamily would be allowed. But the primary residence is the key.
Now, is the surviving spouse of a deceased veteran eligible for the home loan benefit?
They are, As long as the veteran died on active duty or as a result of a direct service-related injury, the spouse of a deceased veteran could be eligible for the VA loan.
Okay, and this is the last question. Are the children of a deceased veteran eligible for the home loan?
They are not, and it's a black and white stance on the VA loan program.
Okay. Well, that's it for the loan portion, just the general questions that people are consistently talking about and asking about. And we are now going to move into the general home buying process and what that's going to look like for you. So now I want to talk about the home buying process in general. And the first step to the home buying process is finding a real estate agent that you can trust. Now, I think this is very important that you find a competent real estate agent that you've interviewed and you click with, because in the end, the transaction should be something that has been a win-win situation for both parties. My job is to make sure that you find your perfect house in the least amount of time and in the least amount of hassle. And I want to make sure that we work together, that there's teamwork involved, and in the end, that happens because there's trust there, and that just means that I'm honest with you and you're honest with me with what you need in the home buying process, and from there we can start looking for properties. So once we've established that trust, I will sit down with you in a consultation at the Keller Williams office, and we will analyze exactly what it is that you're looking for in a home. And we typically want to have your 5 must-haves, and we'll establish that together. Once we've gone through that process and that consultation, the next thing is for someone like Eric to be brought in. The lender will be brought in to talk about the pre-approval process. And what the pre-approval process is once you have everything turned over to Eric, your W-2 forms, your income taxes, your personal statements, we know exactly how much you can afford, so that when we go out and start looking for houses, we're not looking at houses that you can't be financed for.
And another thing I would add to that as well is, when you have referred the borrower to us, and we've gotten them pre-qualified, they've just done the simple application, maybe we haven't gotten their docs yet, we're also going to sort of do our must-haves, if you will. What is your absolute monthly payment budget? What are you truly comfortable spending? Even before they've gone out and found a home, we're going to hope that we've been able to show them at least 3 or 4 options that they may qualify for. We want them to have a real good feel before they've even gotten full docs to us back, a real good feel for what payment is. And I think that's just part of the proper upfront things to do in that pre-qualification and pre-approval process.
Right. And one of the things that to note about a pre-approval versus a pre-qualification, a pre-approval is almost as good as cash, in the sense that the lender has gone through and collected a lot of the documentations that are needed for the financing process, and it's just an upper leg for you as a buyer, showing the seller that, yeah, you really can afford this property. So after we have the pre-approval done, we're going to start selecting properties and viewing properties. Now, what I like to generally do when we want to go out and view properties is I'll try to pick 5 to 7 properties that you've said that you like the most as a buyer, and we will go to the house that you like best first. And the reason that we like to do that is because the best houses usually get bought up first. If you like it, then there's probably a lot of other people that like it. So we go to that property first, and if you just love it, then make an offer right then and there, just because if there's a lot of competition in the market, then by the time that you wait a day or two, that house might already be under contract, and you have to pick your second choice or your third choice. Now, once we go out there and you find the house that you love and have, maybe your top 5 must-need required aspects of the home, then we go in and we write an offer to purchase the property. And some things that you need to consider when you make an offer is that typically an earnest money deposit needs to be made. Now with the VA loan, that can sometimes be flexible because you don't have to make a down payment, so you don't necessarily need to, let's say, put an earnest money deposit. But first of all, that earnest money deposit shows that you have skin in the game and that you're serious about purchasing the home. But you can also use that earnest money, maybe instead of a down payment, you can use it towards your closing costs. So you have that flexibility. Now, once you put in an offer, you might receive a counter offer, and then we will need to start negotiating. And when the negotiating starts, that's when you put in an offer, you have to think about the market and how competitive the market is or isn't. And that's something that your real estate agent would let you know. If there is a competitive market situation, then you want to make sure that when you put in your offer, you're putting in the best offer that you can. That might mean matching the purchase price, and it might mean it being over the purchase price. It just depends on how many offers are on the table at that time, and you want to make sure that you're going in with something that you feel that a seller will actually say yes to. Now, once we've gone through the negotiations, we're going to have someone hopefully accept our offer and accept the contract. Once that happens, you're going to need to start the inspection process. So you're going to hire an inspector, and that can vary into hundreds of dollars. Typically, they're about $400 to $500 for an inspection. And you're not only going to need a normal inspection, but you're also going to need a WDO inspection as well, because like Eric mentioned, that is a mandatory requirement for a VA home loan. Now, once the inspections go through and we again negotiate with the seller on what needs to be fixed and what doesn't need to be fixed, we go and make sure at that point that the mortgage process is, zipped up, that Eric has everything that he needs at that point. And that's when we go in and we order the appraisal for that home.
Right, and I would also say when these things are going on, there are mortgage wheels, if you will, that are already turning. We've already gotten the borrower to sign documents. Processors, or a team, depending on the setup, has already been doing things. There's so much that goes on behind the scenes on any mortgage loan. Mm-hmm. So these wheels are turning at the same time as you're doing your home inspection and getting ready for me or lender to order the appraisal. There's still a lot that's going on.
Right. And at that point, you can either reject the loan or accept the loan, right? And move forward from there.
Correct. I mean, there still is going to be an underwriting aspect of it, but if the lender has done their job on the front end, being thorough, being a professional, reviewing docs, asking the right questions, we know that the underwriting aspect really should be more of a formality at that point. Okay. It still has to happen. There's still a checks and balances system, but the key is that when you're doing all these things and doing the proper due diligence on the real estate negotiation side, the inspection side, the mortgage wheels are still turning, which is important because I don't ever want to be the reason that we didn't make a closing date, right? So we don't want to slow things down.
Okay, great. Now, once we've had everything accepted, we've had the inspections done, we've had the appraisal done, we've scheduled the termite inspection and the survey. At that point, we contact the title company, and the title company gets a hold of you and asks you about, where to wire the money and some of the government documentation that they need. And from there, we pick a closing date, we close on the property, and you take possession of your new home, and we're done with the home buying process. And generally, each part of this can take as long or as little as is necessary, right? It depends on you, how long it takes you to find your perfect home. Typically on the lending side, I would say 30 to 45 days is probably the norm. Mm-hmm. We can do it obviously quicker than that. If
you can, again, competitive marketplace, you may be up against 1, 2, 3 other offers. If we can get this thing closed in 30 days or less, that potentially is going to make your offer stand out.
Right.
And there's no reason it's going to take a lender more than that, to be honest with you, to get everything done. So, the lender should not be a fear when it comes to turn times and negotiations.
Right. So, in all honesty, you could be in your new home in a matter of 2 months.
Easily, yeah.
Well, that's all that we had prepared for you today. I hope that this was educational and calmed any fears that you might have had or any misconceptions that you might have had in general about VA loans and the home buying process. And obviously, if you ever want to reach out to Eric or I, we will have our contact information available for you to reach out to us. And we look forward to helping you in your next home buying process. Bye.